Hello everybody, I'm Cantonese Cat. Hey everybody, Cantonese Cat here. Is time for me to just keep yapping here until I decide to stop yapping, or until you decide to stop this video, which I completely understand, because usually I do these prolonged video and it's just kind of keep rambling on and on, but usually I have a point. The point I'm trying to make today is the same point I made before, and the time before that, and the time before that. I think currently we are going through a lot of volatility over the last 3-4 months or so, and I do believe that there is a lot of rotations that's happening. That is the theme. Is rotation leading to a crash because people are trying to get into defensive position, or is rotation happening in a natural sense based on the cycle and based on having the same amount of increasing liquidity that comes in, that would lead to everything benefiting overall in the long run? And if you don't try to chase one lane to another, if you just stay in your lane, maybe you get there faster, because you know how it goes. Whenever you're in traffic, you try to go to the lane next to you that you think is moving faster. Next thing you know, you move over to the other lane, and the lane that you were on before just start moving again, and the lane that you just moved to just stops. That's usually how they try to throw retail investors and retail traders off, by telling you lies about opportunity costs, about how you're supposed to chase momentum, how you're supposed to look for relative strength and all that. All those things are true to a certain extent, but how they are selling it to you may not be what is going to be the most beneficial for you. In addition to that, a lot of people are also trying to really tell you more advanced market concepts like options and margin and things like that. But the reality is that these are very difficult and very volatile, and they tend to shake you off whenever you get offsides, and the market does a very good job of getting you offside. The reality is this, and I'm not saying anything that is not true here. If you're looking at the market, for example, you look at large caps here, and this is my first concept here. I think that there is a large to small cap rotation. If you look at the large caps here, what do you see? Well, it's done nothing for about 5 months. This is the QQQ up top, which basically is the ETF that represents the NASDAQ 100. These are large cap stocks. They've done absolutely jack for the last 5 months. And because of that, everybody's kind of getting scared. Hey, it's not doing anything for the last 5 months. It doesn't mean that this is like an exhaustive top. Doesn't mean that we're going to end up just crashing from here. There's a lot of speculation, a lot of fear out there that is, for whatever reason, stating that that's the case, and they're also looking for a lot of confirmatory evidence. They show you that this is the top because of, look at how people are positioning into more defensive sectors, such as utilities, such as industrial, such as consumer staples, things like that, and they're going to show you all kinds of data. And on the other hand, you start seeing data like you have some of the highest put to call ratio there is out there, which basically means that a lot of the investors and traders are basically getting offsides, and I don't think market makers want to pay for those puts. Right when you are in a situation of the part of the cycle that has happened before, the time before, and the time before that. What I mean by that is you have a breakout of the small caps represented by Russell 2000 IWM into all-time highs here. We have convincingly break into all-time high territory, I would argue, back in January 2026. The time before that was November 2020. What happened during that time when you have a breakout of the small caps of IWM Russell 2000? What happened to the large caps at that point? Nothing. They did nothing for about 4 months. Next thing you know, the rotationary force happened, and both of them just kind of went up there for about a year and a half after that, and then we talked. The time before that was November of 2016. Whenever we have this run up here over breakout of IWM and Russell 2000 into all-time high, what did the large caps do? Nothing. It just went sideways here for about 4 months until it went up there together with large and small. They're holding hands. They're jumping in the field. They are looking at each other in the eyes, and they're having the greatest time of their life for about 2 years. They just kept going for about 2 years. So this is a rotationary force here that seemed to be working out to the upside. The time before that, when IWM breaks out, small cap breaks out, was back in January 2013. It actually left a big giant gap here on IWM on the monthly chart that you can't really see because none of that really matters anymore, that actually ended up having what the large caps did was nothing. It actually went sideways for about 6-7 months in a row and showing a lot of relative weakness during this breakout here. And what happens after that? Well, you have a very healthy bull market that went on for about 2.5 years, where both the large caps and the small caps just kind of ran up together. The point is this: I think we're at a very similar juncture here. And I don't think you're supposed to be euphoric about this. I think you're supposed to feel sad and scared because your stocks haven't really done anything. If anything, if you look underneath the hood, there are a lot of stocks that have just gone down by a lot over the last 3-4 months. And I'm going to show you some of the examples there and basically telling you in terms of why I think that is. But I think we're at the point in the cycle where the rotation is supposed to happen. This is a key area that just keeps on happening over and over and over again. And in addition to pointing out these various cycles, which so far I'm pointing out 4 different cycles here, so far I also want to point to the one that has the greatest fractal or the greatest similarities based on the appearance, which is actually dating all the way back in the Great Financial Crisis. If you're looking at just the Qs here, at the large caps, you can see how it formed a big giant rounded bottom over here, have a beautiful cup and handle pattern over here, and that resolved to the upside where it ran up for about a whole year until we had a crash here in April 2025 that is narrative based because of scary tariffs, which again, I mean, it's just like whatever. And then that ends up being a V-shaped recovery, pushed price up a lot higher for about 6 consecutive months after that. And we have similar morphology here compared to over here. I believe we do. We have a big giant cup over here from the Great Financial Crisis. Beautiful handle here for a couple months that ended up pushing to the upside here for a few months, just like we did over here. That ended up having some inevitable volatility, that ended up having some pretty big volatility here. Now, you don't really notice that there's any much volatility just looking at it now, but believe me, back in August 2011, all the way to October 2011, it was extremely brutal to see that just kind of going sideways and doing nothing. It actually went down this big giant wick right there. When we just came out of the Great Financial Crisis and a lot of people worry about a double dip recession, it is scary here. It was scary here too, back in April 2025, whenever people worry about tariffs. They actually look like they have very similar morphology. You have a little bit of a inverted hammer top there, and it just ended up plummeting down, right? Inverted hammer tops over here just ended up plummeting all the way down here. Hey, guess what happened? We have a V-shaped recovery here. We have a V-shaped recovery. It ran for about 6 months. Ran about 3-4 months. And next thing you know, you have sideways here for about 7, 8, 9, 10 months. Here we have sideways here for about 5 months. During this period of time, IWM finally decides to break out into all-time high. And they just kind of ran up together. This is a very similar morphology that I'm seeing. Even looking at the small cap, they all show very similar morphology here. To a big giant cup over here with a beautiful handle. Big giant cup over here. Right when it's about to break into all-time high, wasn't able to form a beautiful handle that went a little bit too far than I would expect. And guess what happened after that? Months of breaking out into all-time high here. Months of breaking out, trying to break into all-time high here. Eventually did happen about a year later. Eventually did happen about 10 months later. And they're very, very similar in terms of morphology. So if we are making correlates, I think over here is very similar to over here. I think over here, it could be very similar to over here, which would mean that it could lead to a bull market that could be happening with a lot of people screaming for top, top, top because of valuation, 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 AI bubble, AI bubble, AI bubble. Nobody cares about any of the narratives. If the market crashed, the market crashed. The market crashed because of liquidity crunch. If the market crashed because the cycles are being altered somehow, or if the market crashes because I'm not reading the cycles right, that would be fine. But to come up with these different narratives, national debt's at the highest that it's ever been. I've heard that argument for about 50, I'm not that old, like maybe for the last 65 years. That's how long I've been hearing it. So yeah, that's I probably spent a little bit too much time just talking about this. But that's the reality. That's where I think we are. And unfortunately, I think that people want narratives and they just tend to believe in it. So be it. I don't have much else to say about that. Now, that was the first chart. Second chart I want to show is this QQQ over SPY ratio on the monthly here. It basically shows you relative strength of QQQ over S&P 500. QQQ is represented in NASDAQ. Usually is thought to be a little bit more risk on, tech-heavy kind of sector. So during a bull market, secular bull market in general, QQQ does a lot better than SPY. Kind of like that euphoric move that we've had from October 2019 all the way to really September 2020. Doing this big giant move over here, QQQ is way outperforming SPY. Next thing we have a correction retracing back to the mean. If you just do a dimensionally trace line over here, you can see how it's just been following this line or this channel for the most part, and it doesn't really deviate that far away from the mean, and whenever it does, just basically come back and kind of hurt you. But eventually over time, QQQ does overperform SPY. That's just the nature of the market because it's tech heavy, and that's kind of where most of the deflationary forces are coming from. That's usually where most of the growth is coming from. So be it. So what happened is that a lot of the larger cap stocks, it has been underperforming over the last 4 months. People forget that they've been outperforming extremely well in September and October 2025. Matter of fact, it's been performing extremely well since April all the way to October. That was a really great 6 or 7 months for a lot of risk-on stocks. But a lot of people kind of forget about that. They only focus on what happened over the last 3 or 4 months because they have a short-term memory. They don't look at charts. They don't know. They just get a feel of how the market does, but they don't really know, right? As far as I'm concerned, I think this is a breakout of a previous resistance zone and backtesting and support with 4 really brutal correction months of relatively more risk-on tech-heavy stocks compared to the more overall broader sector kind of stocks. I think this is a necessary correction before it goes higher. Now, if anything, I think it's just wanting to expand further. I think NASDAQ wants to continue to outperform S&P 500. If anything, I think this ratio is just basically getting close to the 20-month moving average that's slightly rising here, backtesting horizontal zone of a breakout here that was previously as a resistance here. So that tells me this ratio is probably going to end up pushing higher over time. Whenever it decides to do that, I think this is a perfect spot for it to do. With that said, I think this is the perfect time for people to call for a market crash because they just have experienced what happened over the last 3-4 months and they don't like it. So that's why maybe they're calling for that, or maybe they think that this is very similar to like over here or whatever. I don't know why they think what they think. It doesn't really matter to me. Another third chart I want to show you is this thing over here called IGV. IGV is the tech sector. I should probably get rid of these lines over here and not bias you. I just want to show that it seems to be a very brutal backtest at the same zone that has backtested multiple times for the last 2 years. And what are we thinking here? Well, I think that there is something that tells me the tech sectors are not getting ready to kind of take off quite just yet. Again, this is the 4-month of correction that I was showing you, which was reflective on the NASDAQ. I was just showing you that it was backtesting a zone. Here, if you just focus on the tech sector, you can see it's also backtesting a zone over here. And it's been extremely brutal for a lot of these stocks. Now, why do I think that this is happening? One reason is whenever it ends up touching the lower Bollinger Band here on the monthly, that usually means that that's the bottom of the tech sector. Touch over here back in February 2016 led to a sustained bull market after that. Touch over here back in March of 2020 during the COVID crash ended up having about 2 years of greatness for this ETF. And next thing you know, we got close to this, maybe with this wick here, not quite. But guess what? We finally touched it. We touched it right there. So as far as I'm concerned, I think that the correction could be over here for the tech sector and for things to just kind of run up here over the long run. Now, I do have a separate chart down below, and you might be thinking that this is kind of ridiculous that I even point this out. What the heck is the copper over gold ratio, and why does it matter? Well, I'm going to try to line up all these different charts here with the copper and gold ratio here down below and show you that, hey, maybe it does seem to reflect where liquidity is going into. What I really mean by that is this. Usually, if you have copper outperforming gold over time, if you have copper outperforming gold, that usually is more reflective of how the overall economy is doing, because that's usually more of an indicator in terms of the industrial sectors. Gold generally tends to be a little bit more of a liquidity sink during times of cautionary times that could still be bull market. We actually argue that so far it's been a bull market for gold for about 3 years now. It's extremely euphoric. People believe in gold. And I think it's more of a liquidity sink. And until that rotates, and this again, I'm talking about rotational theme here, until gold liquidity rotates more into copper, you're not really going to truly get that huge risk on moment here. The last risk on moment that we have really was during the period of time, it started from COVID crash, where most people have either liquidated their portfolio or they get getting margin called or whatever. They just end up leaving the market or whatever. Next thing you know, you have 2 years of sustained run for the tech sector. And that coincides with the bottom of this copper and gold ratio. The time before that, you have a big giant wick down below here in February 2016 that also coincided right where you have the bottom of the copper and gold ratio. The time before that, you have a bottom right here in August of 2011. And that coincides more or less with the November 2011 of the bottom of the copper and gold ratio. Currently, we have touched this trend line more or less right at the bottom of the low Bollinger Band on the monthly. And guess where we're at right now? We are touching this trend line here for the gold and copper ratio tier 2. And this ratio seems to be way overextended to the downside. That tells me that there are some confluences in terms of telling you, hey, maybe we're near bottom over here. And maybe we're going to get ready for some fun stuff here moving forward. I also want to point out, in addition to just the IGV ETF, let's look at some of the individual stocks here. If you look at NVDA, what generally happens during this period of time when you have the copper and gold ratio just basically bottoming out and not doing too much before it goes up, right? That's what happened. The fact is, NVIDIA did nothing, right? Here, NVIDIA did nothing until it runs up. Here, NVIDIA did nothing here, right? For about 5-6 months until it runs up. Here, NVIDIA getting ready to do nothing, and next thing you know, it did nothing for about 7 or 8 months until it runs up for another year. And so far, we've had NVIDIA doing absolutely nothing here. With the interesting thing is, most likely end up running up. The reason why is because it's finally caught up with the blue line up here, with the Tenkan kind of like it did over here, kind of like it did over here. And I think that NVIDIA is more or less just kind of waiting for the blue line to kind of play catch up here before things could go higher and finally caught up. So that's also one reason why I don't think that we have to correct that much further. Again, I could be wrong. We could have a crash. It could crash 5, 10, 15, 20% at any time. I completely accept that as a possibility. I'm just not going to call for it just because I want to call for it, because that's not my primary case. With that said, that's what I'm seeing here at NVIDIA is just waiting for blue line to catch up, and it's finally caught up. So I'm not that bearish on it. If you're looking at some of the other stocks here, look no further than Microsoft. During the bottoming of this copper and gold ratio, Microsoft also shows softness. It's also shown Microsoftness. You see how it's done nothing over here for a few months, done nothing here for a few months, done nothing here for a few months, and also right now it's correcting, backtesting, and closing the gap. Actually, the closure of a monthly gap usually represents a pretty decent support level. Gap closes are usually bullish if it doesn't crash further or whatever. But because it closed this gap here perfectly this month, that makes me wonder. I think the entire move over the last 4 months in terms of correction, maybe just getting ready to close the gap of one of the biggest stocks in the market before we go higher. This is kind of what I think. Matter of fact, this whole thing right here looks just like what Bitcoin just did. So I wonder whether or not liquidity just dragged Microsoft close the gap, and it's at the same time, Bitcoin also just went down to test a heavy liquidity zone, exactly where Microsoft is at right now. That to me is more of a plausible scenario. If you look at another big cap stock here, why are things not going further? Well, look at Google. Google has been running hot for a long time. Google has just been beasting here, and it just needed to kind of cool down here for a few months. Big deal, right? Doesn't mean it's the top for Google. It may be, actually. But as far as I'm concerned, it's still got the trend going. It's overextended away from the Tenkan, right? Way overextended above the blue line here. Doesn't mean it's not going to keep going up higher, but it would be reasonable for it to consolidate sideways for a few months. It's no big deal. But people are perceiving that this means a crash. of the overall market, which I don't necessarily buy into that narrative. You look at AAPL, Apple has done nothing here for about 4 months, but that's the normal consolidation that generally happens at this period of time of the bull market, right? That's generally what happens during this period of time over here. It does nothing for a few months. That generally is what happens over here. It does nothing for a few months. That generally is what happens over here. It does nothing for a few months. All these large cap stocks may be getting ready for rotation into small caps, and they are simply just chilling. The other stock that I want to show for confluence is Tesla. Tesla is a little bit different. It generally front runs this bottom of the copper and gold ratio. It front ran it right in the last cycle around 2019. But even then, the bottoming of this ratio also fits the practical price does nothing. Tesla also have front ran this cycle here as well in terms of the copper and gold ratio. But right now we're going through consolidation just like we did over here, and just like we did over here, and just like we did over here. It is consolidating as expected because we have some relative weakness here in terms of risk on sentiment, and that's completely understandable. Amazon is another one that is showing some expected weakness over here. Expected weakness over here. Expected weakness over here. Expected weakness over here. There's really nothing scary about what's going on as far as I'm concerned by looking at from the cycle behavior of all these stocks. All Amazon is trying to do is that it had a, let me see here, it said it had a monthly bearish divergence that is trying to consolidate sideways over to work out. Not all bearish divergences end up having a crash. Some of them you get some bearish divergence, like over here. You get bearish divergence, right? That's scary. You have a little bit of a high here, but it didn't really quite reach that high, and you just basically resolved down here with lower RSI here in the 60s, dip down to the 50s, kind of like what we're doing right now before further bullish continuation. I'm not really that scared by what Amazon is doing right now based on morphology of the current formation. I don't think it's necessarily indicating like the big distribution pattern. Plus, it also doesn't really fit the cycle anyway. So that's kind of what I'm seeing here, all these large cap stocks, which rotates back over to what I was talking about for the overall tech sector. And I think the relative tech sector here is essentially very similar to the liquidity condition and also the predominant force, if you will, in terms of what's more bullish and what's less bullish over here. I think we still need to wait for the gold liquidity to rotate into copper and rotate to other things here before I can really truly get that bearish on the market. The time to get really bearish on the market is when the copper and gold ratio has topped, right? That's when the tech sector topped over here. Here it topped, but it just kept on going a lot higher, but it was showing a lot of weakness over here for about 2 years after that, where it keeps on revisiting the same zone over here where the copper and gold have topped, right? Same thing over here. After it ran up, you have the ratio topped over here. Price just kept revisiting that zone over here for 2 years after that. I think that we might be getting ready for an next leg up here for the software sector. That's what I'm trying to say here. Now, that's thing number 3. So far, we've gone through QQQ to IWM, large to small cap, rotation. Second, we're having a little bit of rotation between S&P 500 and NASDAQ. Third is we're talking about a little bit of rotation of weakness out of the tech sector here temporarily. So what is this liquidity going into? Well, it is going into not just small cap stocks, but it's also going into dividend stocks. A lot of people looking at dividend stocks, they're like, oh, that's confirmatory. We are definitely entering a recession because we are rotating into dividend stocks. These are safety. We're flying to safety. And that's why blah, blah, blah. That's why blah, blah, blah. Well, maybe it's true. Maybe it's not. Let's take a step back here and think a little bit harder now, shall we? If you're looking at the precise location in terms of when, then this is the ticker symbol S, if I can. SCHD. Basically, SCHD runs the exact same way as IWM. The reason why SCHD runs exactly the same as IWM is because they are also the backbone of the economy. A lot of these stock in SCHD, they pay dividends, but they're paying dividends because they're more mature companies. They have good business models. They benefit when the economy booms, and they suffer when the economy suffers. So as far as I'm concerned, SCHD more or less follows IWM just because you have high prices as SCHD in dividend stock doesn't necessarily mean that market's crashing. That's just not how it works, because if anything, if SCHD breaks an all-time high, that's when a more euphoric market could come soon afterwards. And that happened over and over again, and that correlates with IWM over and over again. So I don't really necessarily buy that argument. If anything, these are kind of like the breakout location. If anything, I think if you look at the copper versus gold ratio, a lot of times before the breakout of SCHD, you have the bottoming of the copper and gold ratio. And that happened over and over again. Usually it's delayed by a few months here, look like over here, and then delayed by about a year, breakout right over here, and then delayed by about 8 months, and then breakout right here, and then delayed by about 8 months, and then breakout right here. We are just breaking out at the same time. I mean, I think liquidity is finally flowing into more of the dividend stocks. The argument for dividend stocks to run up, I think there are two arguments. One is they've been lagging. Just look at how they've been lagging for about a whole year. Since November 2024, it did nothing, right? Into December 2025, they've shown relative weakness here. To have these candles over here to basically break out after the period of consolidation and accumulation, I think is completely understandable. The other reason I think is also they're also showing relative strength here is because the 10-year yield is really looking quite weak here. If you pull the 20-month moving average, you can see how it was going up, and the trend just got exhausted. And we're probably in distribution mode over here for about like 3 years now. Whenever you see the 20-month moving average curling from positive sloping into flat, and maybe starting to get a little bit negative slope over here, it just reminds me over there. I don't expect rate to just drop all the way down. I don't expect yield to go all the way down to like 0%. I just expect more volatility for it to go down a little bit further. Then that's kind of what I'm seeing in terms of what the 10-year yield wants to do. The 2-year yield is in a very clear Wyckoff distribution mode, actually. If you just take up the Bollinger Band here, it just looks like a Wyckoff distribution. This looks very weak to me. So I think rates are going to continue to go down. What does that mean for dividend stocks if yields go down? That means that before, people did not really want to take risk in these dividend stocks because they're getting income, they're getting yields from bonds. And whenever bonds went yields gone up a lot, there's not really a particular need for any dividend stocks. But it looks like that might be going away soon, and I think people are getting front running the potential drop in rates. That might be why. Anyway, I feel like I'm a little bit more too narrative driven here by even talking about it. So I'm gonna kind of stay the heck away from that. But I just want to kind of show you this is not anything in particularly that's scary. The other thing I don't think is anywhere particularly scary is this rotation to industrials. Something that you should get scared about? I don't think so. If anything, I think rotation into industrials is kind of expected in terms of where price is at right now. Because if you are lining up industrials here, not just with copper and gold, but again with small caps, you would see that they behave very similarly. They are basically the same charts. If you turn off all these labels and just look at them, above over here is industrial, below over here is IWM. Why is that? Because there's a lot of industrials in IWM. A lot of the smaller companies, they are involved in industrials. And that's probably part of the reason as to why they mirror each other so well. But with IWM breaking out, that's not a bearish thing, right? Just look at how the breakout of industrials mean for the QQQs. Here, breakout November 2020, that was a pretty bullish month over here, right? Eventually led to a huge run up. And then over here, if you're looking at this big giant breakout here in November 2016, that also was, we're causing some delay here of the NASDAQ stocks, but eventually they ran up together. There's really no reason to think a breakout of industrials mean that rotation is happening to safety and that the economy is going to crash and that we're entering a recession. That's just not how it worked before, cycle after cycle after cycle. Here, you have a breakout over here for the industrials, right? That's so scary. Well, guess what? The NASDAQ's also breaking up. They kind of run together. If you're looking at XLU, look at it and just use that as a grain of salt, because utilities over time, they just keep going up. You're going to see relative weakness here with NASDAQ. That's going to correlate very well with relative weakness here with utilities here as well. I think that whenever you have an outperformance of utility, that might suggest like, hey, you know, maybe we were having a little rotation. That did end up having a April, 2025 slump here for the NASDAQ here, but utilities also did, very poorly at that point. My point is this: utilities kind of run together with NASDAQ anyway. If you look at just overall, whether or not it tells you anything, if it gives you like a any edge, in terms of trading, maybe not. I just don't really see like a particular pattern where if you run up for a long time with utilities, that means that a crash is coming. I just don't really see that, right? Run up in a lot of utilities, matter of fact, sometimes can be accompanied by run up in the NASDAQ by a lot after that. So I don't necessarily believe that this is like a rotation that signifies that a recession is going to come, because it doesn't make sense to me. I could keep going on various sectors, but I feel like I already made a video about that, so I'm not going to do that. What I'm going to do next is to talk about the really risk-on stuff where people don't respect anymore. You have Cathie Woods. She's been trashed for about years now. The reason why is because her stuff went all the way up here in 2021, and it just plummeted all the way into 2022. Within a 2-year span, the whole thing just basically collapsed, right? I mean, you can't even garner any respect from anybody if the ETF that you have dropped about 81% over a span of 2 years. With that said, I think that ARK is getting ready to run up again. A lot of people forgot how bullish certain stocks were from April 2025 all the way to October 2025. A lot of people forgot major stocks like EOS, like Iron, like Cypher. A lot of the really speculative stocks just decided to tick off at that time. Even Tesla took off at that time for many months. Even Coinbase took off at that time for many months. So a lot of people got kind of, upset here because they got sidelined over here in April. They think market is going to keep crashing down further. By the time when ARK Fund makes more of a cycle high here, they have already missed out with the majority of the gains, especially if they end up selling down at the bottom. And if they re-enter over here, they basically have made no gains at all, right? Here, can you imagine if you sell right here at the 0.618 fib over here, where it just flipped that from resistance over here into support? Can you imagine selling that right here? Can you imagine being bearish around where you're expected to find support at? Can you imagine being bearish after 4 months of correction on relatively low volume into a support zone? Can you imagine that? Can you imagine being bearish not just at a 0.618, but getting close to the Ichimoku kitchen over here, where a big correction seemed to have already happened for about 4 months, when the QQ has just been going sideways over here, when IWM has been making all-time highs. You've had a little bit of rotation, right? A lot of liquidity was trapped over here. There was a little bit of rotation into dividend stocks, into IWM, into industrials, into utilities. Can you blame them for taking profits and trying to rotate into things that give them income? You cannot, right? Are you scared because of consecutive 7 green candles that went from $40 all the way up to $92, and it correct all the way back down to about $70? Can you be upset about this? I would not be. I think this is just market behavior, normal market behavior, matter of fact. So I don't really think that this is that bad, and I don't know why people are perceiving it to be that way. I will also line up, and I have to talk about the copper and gold ratio, because I am obsessed with it, because it had opened up my eyes for a lot of things. Now, if you're looking at the copper and gold ratio here, if you line up the two, you can see a couple things. One is you can see that the bottom over here was more or less the bottom for ARK Fund, right? You can see that the bottom over here of the copper and gold ratio is more or less the COVID bottom over here for ARK funds, right? And another important bottom would be where we're at right now, where it looks like we might be bottoming here for the copper and gold ratio, and where ARK Fund itself is at a pretty decent support level at a 0.618 back test of a previous breakout of resistance. This over here does remind me, hey, maybe overall on a greater scheme of things, maybe from like a liquidity, from risk on sense, maybe we're at COVID level. maybe we're at the pre, 2016 huge run level. Maybe we're right there. Well, let's see if it's true or not. It's interesting, right? Looking at the peak over here, well, ARK Fund didn't really peak here, but it did start showing a lot of weakness whenever you have the copper and gold ratio here being peaked. Look at the peak over here for the copper and gold ratio. Oh, that was the peak for the ARK Fund. Interesting, right? So that does make me wonder if the copper and gold ratio is bottomed, whether or not this also means that ARK Fund has also formed a local bottom over here, higher highs and higher lows, right? Higher highs and higher lows. This is a bull trend. Why would you call the market top when ARK looks like this? Why? That makes no sense to me. I am going to not be that absolutist about it, but I just wanted to share my thoughts on it. I think most likely this is a little bit of rotation out. It was a little overextended, and I do think that there is enough liquidity to come back in, because you see a beautiful wick over here. People are buying ARK. Like, people are buying ARK right here. So I just cannot be that bearish on the overall market based on looking at this. The other things here to look at is gold and silver. If I just look at gold, all I have to say is that gold is looking very risky. I'm not saying gold won't keep going higher. A lot of people calling a higher target 6,000, 8,000, whatever. I don't care. Are you talking about gold going up a lot higher? Sure, can it do that? It can. I'm going to basically pull up some of the charts that I've shown on X here before when it comes to gold, copper, and silver here. I mean, first of all, gold is at a very key fib level here. It can go up higher, sure, but it's at the 2.618 log fib here and is struggling to break out so far. If it keeps on going up higher, that's great. I'm not against it going higher. That's fine. The only thing is I just want the copper to gold ratio to go down. If you're also looking at the copper and gold ratio together with gold, I think we're at an important area where it could be topping. Maybe, right? Because if you're looking at the copper and gold ratio, you're hitting bottom of this trend line here again. And each time you hit the bottom, that's kind of like the local top for gold. Boom, 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 and boom. The gold bull market has been happening since 2023. It's been happening for almost 3 straight years. And whenever you have something that's gone parabolic for about 3 straight years and people are becoming more of a believer in it, that does make me worried about that, especially if it's gone parabolic. And especially when you have a classic indicator like copper and gold that's basically just hitting the trend line down here below, it does make me more worried about gold here moving forward. I am also going to shift gear here and talk about silver. I see more or less a very similar fractal here between silver and what happened with a popular stock here back in 2023 called SMCI. It has really done nothing for about 2 years ever since it hit the 3 fib level over here. Silver has also hit the 3 fib level over here in a very, very similar parabolic trajectory to that area. I'm not saying that it's going to have to follow that. I'm just saying that I think silver may be starting to show a little bit of exhaustion of this big giant move up above. It can keep going up higher, don't get me wrong, but I'm a little bit skeptical because I do think that we're at an elevated risk level in terms of where silver is at right now. If you're looking at the actual silver candle, I am seeing a little bit more of like an inside candle here. I have a big giant parabolic move like that. when you have an inside candle, if you end up closing like this in February, that generally leans a little bit more bearish, or at least shows some relative weakness here of silver here moving forward. I would say that because of how strong the silver chart has been without any major pullback, and is hitting the 1.414 level over here, if you do from this cycle high to this cycle low, that's also a very important zone of resistance here. Sometimes when things go up a lot, they just end up consolidating between 1.272 and 1.414 for forever for some reaccumulation before going up again. And that's fine. All I need to show is just some relative weakness in silver and two other things, and that would be fine. I also have had an issue with silver for a long time because it has gone parabolic, and it's to the point where at some point when price is all the way up here, it was way outside the upper Bollinger Band, and now we just basically came back down and tagged it, and we're not really that overextended anymore per se. With that said, I still wonder whether or not we're a little bit overstretched over here like we were over here, and we have to see how it reacts. It hits the 1.618 level over here from this high here to this low over here, and sometimes 1.618 is a very, very strong level, and that's where silver is hitting right now. I worried about getting into silver at these levels because the risk reward just doesn't justify in terms of risk reward ratio. I'm not saying that it won't go higher, I just worry. Now, to summarize as to why I talk about gold and silver is this: if they have gone up so high, if they have trapped so much liquidity, what is the market cap for each one of these? The answer is the gold market cap is $35 trillion and silver market cap is $4.7 trillion. What is the market cap for the entire cryptocurrency space in general? It's about 2.3 trillion. Really is, as much as people talk about Bitcoin, what is the market cap for Bitcoin? It's $1.36 trillion. In the grand scheme of things, it's probably nothing. In the grand scheme of things, it probably has more room to go up. But in the grand scheme of things, a lot of people are basically claiming because it's got institutional involvement, the volatility of Bitcoin is just not as strong. It just had a greater than 50% crash. Like, what do you mean the volatility is not as strong? It is, I think, doing Bitcoin things. I think it is going back to a liquidity zone. Anyway, I can keep talking about it over and over again. I'm just trying to show you in terms of what I mean by the overall market cap here. Now, another question for you. What is the market cap for the entire U.S. stock market? It's closer to about $50 trillion. If you add gold and if you add silver together, they basically match the overall stock market. And the stock market, you can call it a scam, you can call it whatever you want to, you can call it a Ponzi scheme, but it basically represents the U.S. economy based on companies, right? It's capitalism. All these companies, they become public because they want to tap into that liquidity. The liquidity is available in the system. During good times, you're going to pump the stocks up. During bad times, the stocks are going to end up going down just because it all runs in liquidity. And they basically are matching. If gold have gone parabolic and if the stock market is just kind of going up a little bit, it does make me wonder whether or not there could be a little bit of rotation happening, especially when it comes to the small cap stocks, especially when it comes to crypto, especially when it comes to even international markets, because you can see that I think some of the international markets already have some gold liquidity and metal liquidity kind of leak into them a little bit. With that said, talking about international market, this is the Hang Seng Index. It is basically facing two opposing forces. One is that it just broke out of a very powerful multi-year Adam and Eve double bottom, and it pushed through into this beautiful trend line that we've had here for how many decades? Since 2011. And you also have a negative sloping trend line over here that developed since 2018, which is the absolute top for the Hang Seng Index. Since then, you've had multiple touches of the lower trend line. Since then, you have another touch up here in the upper trend line. Why are these things happening? And which way are we going to break? Are we going to break above or are we going to break below? Let's look at, what I'm going to look at. Let's look at the copper versus gold ratio and see whether or not that tells us anything, right? Why do I even keep looking at this? Because I keep seeing things when I look at it. That's why, right? if you're looking at the copper and gold ratio at the bottom and you compare it to the Hang Seng Index, I think that we have most likely closer to the bottom than the top. And I repeat this, I think that by looking at the Hang Seng Index and comparing it to the copper and gold ratio, I think that the Hang Seng Index may be closer to the bottom than the top. And the reason why I say that is because whenever copper and gold ratio over the last really 2 decades, whenever it ends up bottoming over here, that marks the bottom of the Hang Seng Index. Right, here, here, here. Maybe here. Maybe this is just a big deleveraging event, and maybe we are at an important juncture here. Maybe we're getting ready for some risk on going on here. That makes you wonder, right? Interesting. That means that to me, whenever it's done consolidating over here, the move is going to be to the upside. And if you think about, if I have to speculate on liquidity, if I have to come up with different narratives, I can do that too. I can sit here and talk BS all I want and just make up crap. I can just say that, hey, the Chinese, they're going through huge deleveraging event right now. Housing bubble just popped. There is a lot of deflation going on. There is huge youth unemployment. There is a huge use of robotics and AI. With all these things happening, there's more room for the Chinese government to print money. And there's really not any particular reason for them to stop printing money, to be honest. If that's the case, I think this could be a bull flag and consolidation over here before the next move up. If that's the case, this is actually not an unhealthy consolidation. If that's the case, I think it might end up breaking up higher. And if that's the case, I think that the Hang Seng Index might surprise people moving forward. As far as I'm concerned, some people say that Chinese stocks is in a bear trend. I just think that this is a wedge over here. And I think we broke out that wedge and we're kind of back testing that wedge. That's what I think. With that said, this is a lower time frame crap anyway. I'm more talking about from a higher time frame perspective. If you argue that this is a trend change because it's no longer forming higher highs and higher lows, I would say, like, what the hell are you talking about? I'm gonna say that, hey, maybe we do have an inside candle here. Maybe this is a bearish Harami, who knows? But these inside candles usually favor, continuation of the primary trend, and the primary trend seems to be favoring up. You also have all these wicks down here below. I think we backtest a lot of liquidity down here below we're holding. And I think we have a good chance breaking up above. Now, I've never really seen a period of time, and I can backtrack this if you want me to. I don't really care one way or another. I've never really seen a time where the Chinese stock market does well over the last 2 decades and the US stock market does poorly. I just haven't really seen that, because if you look at the QQQ and you line them up together, you pretty much have, like, let's say, for example, the Chinese market is going for a bad time. The US market can consolidate but can still be having a good time. Chinese market goes for a bad time. The US market consolidates but can still have a good time. But whenever the Chinese market goes up, the US market goes up. Chinese market goes up, US market goes up. Right? Chinese market goes up, US market goes up. So I don't really see any case where the Chinese market doesn't do, like, or does well, that the US market is going to crash. I think everything goes through globalization. I think all these markets are tied together. So I just don't understand. The other thing I think is really front running all of this, and then people stop talking about it. Why do people stop talking about it? Because it's not scary anymore. Well, they are making up narratives for it to be scary because it's parabolically going up, so it could not have anywhere to go but down, right? Maybe we're a little bit overextended here on the Nikkei. I'm not going to lie. It is a little bit over the Ichimoku Tenkan here, so the correction can happen anytime. But people have been calling for, like, the yen carry trade and the Japanese market to crash for the entire 2 or 3 years now, since 2024, 2025. And the entire move here, parabolic move on the way up, people have been warning me about the market, and I just don't really know what they're warning me about. I mean, I guess they've just warned me maybe I'm not bullish enough on the Japanese market. Is that what it is? Maybe. You have 2 huge deleveraging events that happened here. August 2024. Big, giant, nice dragonfly hammer candle. That's extremely bullish. Followed by another dragonfly hammer candle over here in April 2025. That's extremely bullish too. What do I mean by extremely bullish? Whenever things crash, and when I say that things look extremely bullish, they look at me and they say, "What are you talking about, bro? Like, what are you talking about? It's crashing. Price gone down. What do you mean bullish? It makes no sense." This is, I don't know, maybe I'm just crazy, right? Deleveraging happened. Weekends got shaken out. Boom. That's exactly what happened. I think that, if anything, I think that the Nikkei is front running the entire risk on sentiment. Because if you're looking at, and this is not the Nikkei that has the most history, is actually this ticker over here. Because if you look at the Nikkei, you know what I'm going to go back to. Copper versus gold ratio. If you compare those two, if you line them up together, you see that there was a great correlation in the past, more or less, right? You see that there's a great correlation in the past, more or less, because that's the bottom of the copper and gold ratio. That's the bottom of the Nikkei. That's the bottom of the Nikkei. That's the bottom of the copper gold ratio. That's the bottom of the Nikkei. That's the bottom of the copper gold ratio. That's the bottom of the Nikkei. And that's the bottom of the. That's the bottom of the Nikkei. What? What are you talking about? It's like at all-time highs, right? I think the Japanese market is front running this time. It is what it is. Maybe gold liquidity start rotating over to, like, international markets. I don't know. I can come up with all kinds of narratives to explain that. All I know is that I don't think we're near the top because of what I'm seeing. Based on international market strength, based on Hang Seng Index, based on the fact that I think ARK is nearing its correction, based on the fact that a lot of large cap stocks are basically just waiting for a correction to happen that are more or less reasonable to have, and they're having them. All of this is coming to the point where you have things looking pretty good, but people are not feeling good about it. I don't know. This is a common psychology for a lot of people who decide to remain single because they've gone through so much trauma in the past that they don't think they deserve anything good, and they frown upon other people when other people try to talk about gross things like love and romance. All this stuff is supposed to make you feel good, and they just call them, you're just blindly in love. You're just a blind bull. You look at everything, you're so optimistic all the time. Life is crap. You're not supposed to be happy. You always have to worry about something, because I'm worried about something. I don't really care about any of that. All right, so I spent about 52 minutes talking about the international market. I have yet to really talk about Bitcoin. Do I really need to talk about Bitcoin? Well, yeah, yes and no. I'll show you what I think might be happening with Bitcoin. And I don't really feel absolutist about it. This is just a discussion. And I don't care if you disagree. If you disagree, that's good. Good for you. If you disagree, that means you have thoughts. And if you have thoughts, that means we're having conversation. If we're having conversations, that means that... what does that mean? That means that I think you're keeping an open mind and getting ready for all types of scenario, including one that seem unlikely at this point, that seem a little bit too bullish here. I'm lining up Bitcoin, current crash right here, with the IWM crash that we just had in April 2025. This is the weekly chart. I think the morphology looks very similar between the two. And if you are timing each of these drops that you have, they even hit similar fit levels. Just look at that. Like, what the heck? Like, what is going on? Here, IWM actually end up closing above the 0.236 here for about 3 weeks in a row before it really starts to go up. I think hopefully we're doing the same thing with Bitcoin. I really do want Bitcoin to close about 67.2 to end the week with 3 nice wicks down below. That would favor further bullish continuation, right? That would favor having a reversal there. If you have 3 wicks down below, that's pretty good. Now, if you're comparing to the bottom over here, you're comparing the bottom over here to, let's say, the top over here, right? And I'm going to try and get this thing out the way here. We're comparing bottom over here to the top over here. That's about 57 weeks. Bitcoin, 62 weeks. Pretty close. If you're comparing the top over here to the bottom that we just had for IWM, that's about 20 weeks, right? Over here from the top of Bitcoin all the way down to the bottom here, about 17 weeks, pretty close together. So if we're talking about all these different morphology, if we're talking about getting close to the 0.136 or actually hitting the 0.136 here for the case of the IWM here, if we're talking about hitting the level and then holding 2 subsequent weeks above the 0.236 here, which currently we look like we're in the process of doing. If you're looking at the fractal here, and if you're thinking about 40 bars from the bottom, where it hits the 1.272, which is what IWM has done, you're talking about 40 bars, right? You're talking about 40 bars from the bottom. Actually, I think this is probably more like, close enough. 40 bars from the bottom to 1.272. If Bitcoin does the same thing, that means that we hit $147,197.93 by November of 2026. If this fractal works out. If the market runs an algorithm, if this is nothing but a liquidity grab, which I think it could very well be, because if you zoom out and just basically look at the overall morphology of the market, if I get rid of all this, it takes me a little time to draw them anyway. If you look at the morphology of the overall market, you can see that basically Bitcoin is just revisiting this big liquidity zone over here that's lasted for about, many, many years, since 2021. There's a lot of price history here. It's going to serve as some pretty decent support here. People are calling for lower because it's sensational to do so, because it's a downtrend. They think it's going to go a lot lower. I think it's a perfectly fine liquidity zone for it to try to find some support. I think this thing over here is overdone. I think minimally you're going to have a little bit of retracement to the mean over here, and that could turn into something more beautiful. We have to see how it reacts. I'm not going to be absolutist about it. All I can say is that it's hitting previous all-time high here, and it's hitting a huge liquidity zone over here that we spent a whole year with a lot of price history here, and we're basically right on top of that liquidity zone. That's all I'm saying. If you're also pulling the volume shelf over here, probably shouldn't be going that far, but you can see that it's at a huge liquidity zone over here, right? Like you can see that it's basically got a lot of price history over here. So does it have to drop all the way down lower? No. If you're able to find liquidity zone over here and it bounce up, it's going to probably bounce back up to this region over here around 85 to 87,000. That's going to be the retracement to the mean here for you if you're able to find support down here below. I don't know if it has to crash down further. If it does crash down further, then so be it. But I just don't know what the argument is. I don't know what a 4-year cycle is anymore, because a lot of people are defining 4-year cycle before based on Bitcoin halving, and they're attributing a lot of behavior to it as well, like the Bitcoin dominance, like altcoin season, like Ethereum price movement. In the overall stock market, they try to use the 4-year cycle for everything, and it's just really simply hasn't really been playing out that way. There is a divergence between Bitcoin and the stock market, a huge divergence between the Bitcoin and the stock market, actually, because if you look at the IWM below, you look at the Bitcoin price action above, whenever you end up having Bitcoin crashing recently, IWM just like basically hanging out at like all-time highs. Whenever you had the IWM crashing back in April 2025, Bitcoin held extremely well and was leading its recovery very, very well. This is very, very different behavior here, even from all these different highs and lows. Like sometimes Bitcoin would just outperform when the stock market would just underperform. Bitcoin would just outperform and the stock market would just underperform. Bitcoin would just underperform when the stock market is outperformed. There's a rotation that's been happening between these over the last 3-4 years. And I think it's currently going for a rotation right now, meaning that the sentiment right now for Bitcoin is extremely poor, while for stocks it's not even that great, even though IWM is like near its all-time high, which is just extremely insane to me. It also has gone through a big ABC correction. As far as I'm concerned, I think a big correction is done. I would look forward to maybe a little bit of retracement back to the mean. If it gets rejected up around 85, 87,000, if it goes down and that'll look lower, then so be it. I'm a subscriber for the 4-year cycle. I'm sorry. You guys are right. This only happens to Bitcoin. It happens to nothing else. So let's not extrapolate the 4-year cycle to anything else here at this point. But it just doesn't really fit. The last time when you have the prolonged Bitcoin bear cycle was happening when everything was plummeting, when there's a liquidity crunch in everything. We're just not really seeing that. That allows me to have a certain level of skepticism in terms of now we're closer to the bottom than the top, or if there's still a lot more downward movement to go. I also want to point this out too. With the most recent drop in Bitcoin, I mean, Ethereum hasn't done that great, but at least Ethereum is doing something that Bitcoin is not doing. At least Ethereum is forming a higher high over here compared to that, and a higher low so far compared to over here to that, whereas Bitcoin formed a lower low. That is something that is actually gonna proceed maybe a little bit more of a recovery rather than it's having worsening bear market moving forward. Because the last time when I saw this happen, and this doesn't happen a lot, by the way, whenever you have Bitcoin crash down and Ethereum actually holds better. The last time I saw it was over here, right? Last time I saw it was from the bottom, from the absolute bottom of Ethereum, which is around $881. And it made a higher low here when Bitcoin made a lower low. That was the last time when I saw that, and that marked the bottom of Bitcoin, and the rest is history, right? So that do maintain certain level of skepticism. The other thing too that's also very interesting is if you look at all the other altcoins overall, if you exclude the top 10 coins, this is the cryptocurrency market cap excluding the top 10 here. If I just simply kind of line them up over here, you can see another thing that's also very interesting here too, is that yes, altcoin also sucked here, but Bitcoin seemed to have sucked worse, right? That's interesting. If you're looking at a crap coin like Pepe, actually Pepe's holding extremely well over here. It's done nothing over here for about 4 or 5 months here when Bitcoin just made a lower low. That leads us to think that maybe we're starting to run out of sellers here for altcoins. And when Bitcoin is just finally finishing its deleveraging, and we are at an important juncture here where maybe we're fitting a rotation theme here going. The theme of today's hour talk is rotation. And I'm seeing rotation, I'm going to summarize it here for you. I'm seeing rotation from large cap to small caps. I'm seeing rotation back away from S&P 500 back into NASDAQ here soon, probably. I'm seeing a rotationary force rotating away from the tech sector to other sectors. And I think the tech sector might be bottoming from its rotation. I think that the other dividend sectors or the other defensive sectors are benefiting from this rotation, and they have really done not much from before. Is finally just a part of rotation to make sure that they continue to participate with the overall bull market and to cool down some of these tech names here as much as possible before the next leg up. I think that ARK Fund is correcting enough from what it is for the last 4 or 5 months into strong support zone. I think gold and silver are way too hyped up, and they are at a higher risk if they end up having just stabilizing the price. I'm not talking about you just stop them from going parabolic so liquidity can go and rotate into other things. Then the other things would benefit from it. I'm talking about international market like the Hang Seng Index and the NIKKEI, the Japanese market. I'm talking about Bitcoin. I'm talking about altcoins. They all are showing signs of rotation rather than a liquidity crunch. They're all showing signs of deleveraging in selected sectors rather than deleveraging the entire finance system. They're all showing signs of a healthy rotation rather than before market crash. I cannot guarantee you that market crash won't come. And I would not guarantee you that because you actually want market crashes to happen. I just show you what happened with the Nikkei. You have 2 market crashes about 8 months apart. Next thing you know, the thing just goes parabolic. Okay. I think that currently we have had 2 major capitulation events here in altcoins that kind of mirrors the Nikkei here a little bit. Anyway, all this stuff is just speculation and more speculation and more speculation. Just like what they're doing out there. They're all speculating. I'm just doing the same thing. So take me no mind. What I'm talking about is not truth. There is no truth. There is no market god. They don't exist. If anybody pretends to be a market god, and if they call a certain price, I'm going to share some things here with you. First of all, if you don't follow me on X, consider doing so. I have a lot of fun on there. Some people just say that like they love me and they will always love me, and I had to write back something poetic in response to that. There are a lot of things like these kitchen kind of analogies here. If you don't get your girl all in the mood and then go to the kitchen and microwave a plate of spaghetti to slurp on, why should you go against the trend? I don't buy IPOs. Virgins are overvalued. I don't buy parabolic moves. Hot models are overrated. I buy when things are consolidating and trying to form a base before the next move. Single moms in a soup kitchen trying their very best to figure out things are the sexiest. I still feel that. I would choose that any other day. The quote that I was trying to get to, I hate quoting myself, but I don't want to say the same thing over and over again. Right? To say that certain stock would hit certain price as an absolute statement, it's like watching a game, saying a certain team would beat another team by this many points. Like these like testosterone-filled guys with absolutism keep coming up with these random predictions that is based on just how they feel. And if they're right, they wouldn't shut up about it. If they're wrong, they go on to make the next prediction. That's crazy. I'd rather flirt with your wife or your husband while you're glued to the TV, trying to figure out whether or not you're right about your absolute prediction. That doesn't matter. Why even play the game if the outcome is certain? Anyway, thank you so much for listening to this video, guys. You guys have a good one. Bye.